Welcome to the Agent of Wealth podcast with Marc Bautis from Bautis Financial. In this podcast, Marc helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Marc draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth. This is your host, Marc Bautis. We talked recently in episode 262 about helping adult children buy a home. In the feedback from that episode, I've had conversations with parents in a similar boat who are thinking about helping with or fully paying for their child's wedding. Today, I want to dig into that topic. In this episode, I'll walk you through the cost of modern weddings, the emotional and relational side of contributing, how to decide whether to pay and how much, and some strategies to structure that support in a financially prudent way. As we all know, weddings today are expensive. In 2025, Zola projects the average cost of a U.S. wedding to be $36,000. The Knot reports an average cost per guest of $284 with the typical guest count around 116 people. In higher cost states like New Jersey, the average can be well above the national average. In fact, recent media reports say New Jersey ranks among the most expensive for weddings. And these are just averages. Many weddings cost more, some cost less, depending upon the venue, the guest list, the style, and other attributing factors. The parents as benefactor role is emotionally charged. Expectations, fairness among other siblings, financial burden, and even unintended consequences. For example, dependency, entitlement, all can come into play. I've had conversations with those across my practice that start with something like this. We want to give this gift, but don't want to wreck our retirement plan or don't know or not sure how much to give. And often contributing to a wedding comes up when we'll have that conversation about, well, are there any large purchases that you see in your future or large spending or goals? And after we come across like your typical ones of retirement and paying for your child's education and maybe buying a second home, contributing to a wedding or paying for your child's wedding definitely comes up, or it's definitely things that someone is thinking of. So this episode aims to give you a framework so you can make this decision intentionally and sustainably. But before we get into the numbers and logistics, let's talk about the emotional side of this decision. A lot of people think of finances and it just revolves around money. And of course, the quantitative aspect of it is, obviously very important, but just as, or even sometimes even more, is the emotional side of what you decide to do with your money. Weddings are one of those milestone events that stir up a lot of emotion and family history. For many parents, helping pay for the wedding, it feels like a way to express your love, your generosity, to give your child a beautiful start to their married life. And also the other thing I found is, parents are selfless when it comes to their kids. I see that all the time with they'll want to prioritize education, paying for their child's education over their own goals or their own needs or their own retirement, things like that. But unfortunately, paying for a wedding, contributing to a wedding, it also can come with tension, expectations, and questions of fairness. So one of the most common challenges I see when working with people around this topic is managing expectations, both their own and their child's. Sometimes a couple assumes that, mom and dad will automatically foot the entire bill, especially if that's what they've seen in their circle of friends and family. Other times the parents assume that their contribution will be a small symbolic gesture, only to find out later that the engaged couple is planning a 200 to 300 person event at a waterfront venue that costs an astronomical amount of money. Those disconnects that they can create stress if they're not addressed early on. And like almost everything in finances, I guess everything all over the place, communication is key. Then there's the question of fairness. So if you have more than one child and you contribute to one wedding, what happens when the next child gets engaged? Do they get the same dollar amount? Will it be the same type of event? Or what if they don't get married and they think that they should, because some amount of money was spent on their sibling, that they should also get that same amount of money, even if they're not getting married? So I've seen people struggle here, and it's not because they want to favor one child over the other, but because life changes. Maybe they're retired and they have less of a budget for gifting, or maybe they're worried about retiring and that income shuts off, and are they going to be able to contribute? So these are the kinds of real life considerations that make it important to set those clear expectations. Another key piece is you want to decide how you want to structure your involvement. And for that, you want to look at questions like, are you giving this money as a gift? Is it a loan? Are you paying the vendors directly? Are you offering a lump sum and letting the couple decide how to allocate it? And there's no right answer to these, but I found that when parents treat it as a gift with boundaries, things tend to go smoother. So that means you make your contribution with no strings attached, but you also set clear parameters. Maybe you'll cover the venue and catering up to a certain amount, and beyond that, it's on the couple. This approach, it helps maintain balance. It allows you to be generous without creating resentment or enabling overspending. You kind of want to remember the goal is to celebrate your child, not to fund a wedding that could jeopardize your financial goals or your relationship, right? So you can, and that goes back to that scenario where you're giving a set amount and saying, okay, this covers what it covers, and anything that you want to do over this, it's on you. Before you decide on how much to give, you want to take the time to reflect on the emotional side of the equation. What message do you want your contribution to send? How can you support your child while also setting healthy financial and relational boundaries? Getting those answers clear from the start, it helps make every other decision that follows with this process much easier. All right, so the next step is you want to make a clear, intentional decision about whether to contribute, and if so, how much. Obviously, you have to decide in the first place. There's no right that you have to contribute. You want to ask yourself, which is simple but critical, can you afford it without jeopardizing your own financial goals, right? And you want to actually look at everything else you have going on and take out, okay, my contribution is going to be X. How does that impact everything else I have going on financially? The generosity, it's best when it comes from a position of strength, not sacrifice. And you want to give because you can, not because you feel obligated. So start by reviewing your financial picture, look at your cash flow, your savings, retirement accounts, short-term goals, and it's that asking yourself that question. If we contribute 20,000 or 30,000 or 40 or whatever the number is, how will it affect your ability to retire, maintain your lifestyle, or do everything else that you want or need to do with your finances? So this is where financial planning tools become powerful. And what we do is we take the approach of we run this what if scenario. So for example, testing how that one-time expense like a wedding contribution could affect your long-term projection or short-term as well. Sometimes it's eye-opening. You see the ripple effects. So you think, okay, it's only 20,000, 30,000, 40, or whatever the number is. And sometimes the number that you can make is actually much larger than that without missing a beat. Other times it's a wake-up call that paying for this full wedding would significantly impact your security later on. And it's all different. Some people think they can't do it and they can do it. Some people think that or want to do it and it really will cause some significant issues down the road. But once you've determined what's feasible for you, the next step is to set, you want to get realistic about what the wedding actually cost, especially in your region, because it varies. I'm located in northern New Jersey, where venues are in high demand. Vendors are often tied to the New York market. Costs can be significantly higher than other regions. Some of the local weddings in here can see prices 50,000, 75,000, hundreds, six figures that you're looking at. Depends on the size, the level of formality. So you definitely want to start researching what a wedding will cost. From there, you want to start structuring your contribution. One approach I often recommend is you set a clear dollar amount that you're comfortable contributing and you communicate that up front. Then you let your child, their partner decide how to allocate it. That way you're supportive, but you're not managing every vendor detail. You're not negotiating napkin colors. It also keeps things fair and avoids that emotional pitfalls later if costs creep up. Another option some parents like is matching structure, agreeing to match whatever the couple or the other parents can contribute up to a certain cap. I've often seen families take a hybrid approach where parents agree to pay for certain categories, the venue and catering, for example, while the couple or the other parents cover other categories. And this can work well too. The key to any of these approaches is the communication and clarity. Be explicit about what your contribution covers, what it doesn't cover. If you're offering a flat amount, say so. If you're covering specific expenses, define them. And if you're willing to help only up to a point, make that boundary clear before deposits are made and contracts are signed. One pitfall I see too often is parents keep things vague, saying things like, we'll help with the wedding, without defining what that means. And the problem is when you leave that door open, it's easy for cost to balloon, a venue upgrade here, an extra 50 guests there. Before you know it, your contribution has doubled. if you're okay getting into that, and again, if those scenarios says, yeah, you can contribute as much as you want, then go for it. But again, the boundaries and the clear communication is what I've seen people have more success with. Someone we're working with once described this as the slow creep of generosity. At first, they were going to contribute $20,000 to their son's wedding. By the time the final bill came in, it was doubled. They spent $40,000. They were feeling a little more stressed than celebratory. The key takeaway from that experience was the importance of setting a firm limit and sticking to it. So take that time, decide what makes sense for you, review your financial plan, research realistic wedding costs, and set clear boundaries with your child. And remember, it's not just about writing a check, it's about aligning your generosity with your financial reality so you can give with confidence, stay on track with your goals, and preserve family harmony in the process. The next question is, well, okay, how do I actually fund this? So for most parents, the easiest and safest way is use cash that you already have on hand from savings, a liquid account, so that you're not borrowing or jeopardizing other financial goals. That being said, sometimes borrowing from your assets might make more sense. You have to look into it. What are your options? What's the best way to get access to cash to fund this? Sometimes there's cash on hand. Sometimes borrowing off of a different asset may make sense. You may avoid paying capital gains by having to liquidate a particular asset. You just want to look at all options and the pros and cons of each option to fund what you decide your contribution to be. You want to fund the event without creating a financial strain and do it in the most optimal, including tax optimal way possible. So there's, using cash savings. You basically just want to look at everything. If you're over a certain age, you may even look to, does it make sense to take a distribution from a retirement account? Does it make sense to take a line of credit off of a home or assets? You want to consider your taxes. Wedding gifts are generally subject to the gift tax rules if they exceed certain thresholds. For most parents, it falls under the annual exclusion that isn't taxed, but you still it's just something to think about, especially if you're giving gifts to other family members that year to compensate or make up for what you're doing for one child. So after you decide how much to contribute, how to fund it, the timing becomes critical to figure out. Ideally, you want to make that decision, or you want to do everything as early as possible. Obviously, the engagement is going to be announced and then the planning starts, but you want to have that decision made before the major deposits have to be paid for the vendors. What you don't want is that creep, right? Where it's, okay, we've signed with this vendor, we need 20,000 now. And now you're starting to rush and you have to make decisions too quick than you'd want to. And that's when you start getting stressed and maybe you don't make the right decision. So there's different approaches to it. Many parents find it helpful to release the funds in phases. For instance, you might cover the venue deposit first, then catering, then final payment as the wedding approaches. Phased funding gives you that oversight, ensuring the funds are used as intended, helps avoid surprises. It also keeps you and your child aligned on the expectations. Like everything, weddings rarely go perfectly according to the plan. Costs can increase due to additional guests, upgrades, unforeseen wedding charges. I always recommend building in a buffer, maybe 5 to 10%, and decide upfront how the overages will be handled. Again, going back to the communication. Will the couple cover them? Will you split it? Are you covering all of it? Setting the rules in advance, it avoids, any stress, tension when those changes do come. And then finally, after the wedding, take a moment to review how everything went, compare plan versus actual spending, note any lessons learned, kind of. Even if it's the last time you're gonna do it, you want to treat it as if you were a business and you're kind of doing a postmortem on it, and just because it's probably not the only or last complex decision that you have to make. There might be future family events, whether it's another wedding or a milestone celebration or something else where you're similar. You have a similar process, and you just want to make sure that, okay, if something didn't go right, or if there's a way that you can do it better, the next time you have that information or you think about that information. Having a clear framework for timing and adjustments, it keeps, everything smoother. It helps ensure financial security, and it really protects, everyone involved, and making sure that your financial future is protected, as well as kind of, again, going back to that emotional aspect that's you don't want something that should be celebratory causing stress within the family. If you're parent considering how to help with a wedding, I recommend taking that time, run a scenario in your financial plan, see what fits comfortably, set your boundaries, communicate it openly and early. We can help you walk through this. You can schedule a call at bautisfinancial.com/call. Thanks for listening to today's episode. If you found today's discussion helpful, please subscribe, rate, and review the show. And stay tuned for future episodes where we tackle other financial topics to help families navigate life's big moments. Don't forget to follow the Agent of Wealth on the platform you listen from and leave us a review of the show. We're currently accepting new clients, and if you'd like to schedule a one-on-one consultation with our advisors, please do so at bautisfinancial.com/call.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.